Hey, this video is more of just a PSA announcement that there are higher taxes on the horizon, and we're going to go over that today in today's video, so stick around. I'm Spencer Ford, CEO and Wealth Advisor with Conservative Financial Solutions, a certified financial planner professional, and I'll see you on the other side of the buffer. Okay, so we have 3 years left of the Tax Cuts and Jobs Act of 2017. So for a lot of Americans, what they saw from 2017 to 2018, they saw a reduction in their marginal income tax bracket. And we're coming up on the end of that. That was a temporary bill that was passed for individuals. So corporations saw a permanent tax reduction from 35% to 21%, but personal filers, what they saw was temporary, it's based off of 8 years. So it expires in 2025 if you didn't know. And there's just a couple of things that I want to point out to you so you don't miss opportunities, because it's a limited opportunity. And that's specifically what we've been doing for a lot of families, is looking at Roth conversions and where can we help them recognize tax now at a lower rate where they would have to recognize that tax at a higher rate in the future. So again, just wanted to point out a couple of things to you, and I have a cheat sheet here for myself. So right now in 2023, if you're a single filer, the top of the 22% tax bracket goes to $95,000. And all I did on this chart right here was I just inflated everything by 3%. So if the tax bracket continues to or expands by 3%, by the time we get to end of 2025, the top bracket for a single filer in the 22% tax bracket is 101,184. And if I just inflate everything by 3% since 2017, the new tax brackets that we're going to fall under, or I should say the old brackets that we're going to go back to after the current tax laws expire, because that's what's expected to happen, then you're going to be in the 25% tax bracket if you're a single filer with taxable income of $90,000 a year. So you're going to see a 3% jump in your marginal income tax bracket. If you have some wiggle room, let's say you have that, let's say you have $80,000 of taxable income, and there's $20,000 of wiggle room in your tax bracket, it may make sense to take a look at, hey, can I pull $20,000 out of my IRA, pay the tax on it, move it to a Roth IRA at 22% as opposed to waiting until I'm in the 25% tax bracket. If you're married filing joint, the top of the 24% tax bracket goes to $364. Okay, so in 2025, that'd be close to $386 if we're inflating everything by 3%. Well, look at this. You jump to the 28% tax bracket based on close to the same amount of income. So if your taxable income is $250,000, then you're going to jump 4% in your marginal income tax bracket. So does it make sense to take some extra distributions while you're in that lower tax bracket, pay the tax, so that way the money can now grow tax-free, and you've insulated yourselves from these future tax increases. Again, I just want to take a moment and let you know the time is ticking on this. There's some opportunities here that's provided by the tax code. It's expected to change. It's expected to expire at the end of 2025. And so we have 3 years left. We've had 8 years, and for the families that have been on board with us for that time, we've been doing conversions every single year. But we have 3 years left, 3 years of opportunity left. So just don't want anybody missing out if it's a strategy that makes sense for them. My name is Spencer Ford, certified financial planner professional with Conservative Financial Solutions, and we'll see you in the next one.